Las Vegas Sands just blew past second quarter estimates with a staggering $3.2 billion in revenue. That's a 24% growth in EBITDA and an $800 million buyback. From the record-breaking Marina Bay to the revival of Macau's Londoner, is LVS the comeback story of the year? Stick around to find out why this impressive beat could spark even bigger gains.
Gary, moving on to Las Vegas Sands, thing number 3, big note was Marina Bay Sands profitably sets new records. The Londoner opened up from their renovation. Gary, let's get right into it. Thing number 3, LVS crushes earnings expectations. Great stuff.
Yeah, all right, Rob. So Las Vegas Sands, tickers LVS, they had a fantastic second quarter. This is something I told DKI Premium subscribers to expect earlier in the month. It's been a long-term position for us. In the last quarter, that stock is up, let me see. Let's see. We were just above 30. It's at 53 right now. So, that's more than $20 profit on a $30 base. Yeah, it's up somewhere between close to 70% in the last 3 months. That's worked out really well for us. Let's talk about what happened in the quarter and why. Revenue of $3.2 billion was up 15%. Crushed analyst estimates at $2.8 billion. Adjusted property EBITDA was up 24%. Here's the big one. Adjusted earnings per share of 79 cents was above analyst expectations of 53 and last year's 55 cents. Sands management has always been shareholder friendly. In the quarter, in addition to maintaining the dividend, they bought back another $800 million of stock at prices well below the current market price. I think they paid something like 25-30% discount to the current market price. The Marina Bay Sands in Singapore, that has more than half the market in the giant Singapore market, they did a massive $768 million in EBITDA. That is a huge record. Now, some of you might say, wait a minute, you had above expected hold. That's just a fancy finance way of saying that the company got lucky at the gambling tables. Believe it or not, a casino can get lucky or unlucky just like we can. So they got $107 million lucky and above expected hold. Okay, so let's adjust for that. The adjusted for hold EBITDA number was $661 million. Guess what? Even that was a new record. So in Macau, the newly renovated Londoner doubled its EBITDA despite not being fully open for 1/3 of the quarter. That's pretty amazing. And then in something that some consider bad news, but I consider good news, Sands results, this blowout quarter, happened despite a few Macau properties underperforming. Management addressed it directly on the call. They said, hey, look, we know these few properties are not doing well. We've already implemented a new pricing plan to regain market share. We're already seeing results from it. So basically, they did all of this with a small part of the portfolio lagging. And what they said on the call is that lagging part of the portfolio is already showing improvement.
Yeah, Gary, I'm going to ask a question that I already know the answer to, which I know generally is a no-no, but I'm asking it for emphasis, right? Because I think this really highlights the value of deep knowledge investing and quality of the research, understanding of what's going on with the positions and why, and more importantly, identifying ones where the market is just missing something. So that's my disclaimer. My question: why was the stock so low earlier this year? What had people worried, or what did DKI see, which here's the value, that nobody else saw?
Yeah, so that is the right question, Rob. And it's a bunch of stuff that we knew we shouldn't be worried about. Early on, people were worried about Macau visitation, but that's turned around. It's quickly approaching pre-pandemic levels. Then they worried that China would retaliate against US-based concessionaires. Those are companies like Las Vegas and Wynn. The concern was, hey, President Trump initiated tariffs, so China is going to, or they were worried that China would retaliate against Sands and Wynn. The truth is that those two companies have been excellent corporate citizens. They've created tons of jobs in Macau. Every time the government has asked them for adjustments or cooperation, they've provided it. And China, they've never hinted they'd take aim at these good corporate citizens. And the truth is, beyond that, any action against U.S. companies would end foreign investment in China. That's something the country desperately needs. confiscating the foreign-owned assets in your country is a guarantee no one will ever invest there again. China doesn't want to have that problem. And then the final thing was people were worried that results at Las Vegas Sands were falling. And that was true, but it was due to temporary and now almost completed renovations. Basically, casinos are buildings that are used really hard. People go, they want to relax, they party there, and those hotels need to be renovated. So yeah, the results were down previously, and the reason for that is because they had a bunch of rooms out of service. Guess what? Those rooms are back in service, and we saw what happened with the results. So it was people getting worried about a lot of either short-term things or things that just don't matter and didn't happen.
Yeah, great breakdown there, Gary. And I think, again, just highlights overall value of the way you're looking at the market, regardless, good, bad, indifferent, identifying those unique opportunities to capitalize on. And then one more critical thing as well, what are we doing? And this is not a question now, this is a statement. What are we doing with the stock is just as critical as this run up to the level that it's currently at. So one of the unique things that DKI premium subscribers receive is it's not only important to know when to buy, it's more important to know when to sell as well. You'll have to subscribe to find out what we're doing with LVS moving forward.